Hey Bowtie Nation, Joseph Hogue here, and a big update to one of the videos a few months ago on uranium stocks. I highlighted these 5 stocks late February on a massive supply-demand imbalance for an average return of 67% in just the last 6 months. One of these stocks is up 110% in that time, and Reddit investors have just gotten involved in a move that could send them even higher. In this video, I'll update you on the long-term supply and demand fundamentals behind the rise in uranium stocks. I'll then reveal the short-term catalysts that could send them even higher, along with an update to those 5 stocks to buy. We're getting started, but I've got to send that special shout out to all you out there in the nation. Thank you for spending a part of your day to be here. If you're not part of that community yet, just click that little red subscribe button. It's free and you'll never miss an episode. I want to start with the long-term fundamentals in these stocks because I feel like even though that short-term return has been great, the longer-term picture is still where the investment is in uranium. Nuclear capacity at America's 58 power plants is just 9% of the total U.S. energy capability, but accounts for 20% of actual power generation because reactors are used so much more intensely. Nuclear is one of the most efficient forms of renewable energy, and it's about to become an even larger part of that dream to energy independence. The green infrastructure plan working its way through Congress could mean a surge in construction, and the Biden plan specifically calls on nuclear energy to reach its carbon-free target from renewables. But there is just one little problem. The U.S. imports 95% of the uranium used in these reactors, the critical fuel used in nuclear fission. A full 80% of the world's uranium mining is done by state-owned companies, much of it in Kazakhstan, Russia, and Africa. And that global production shutdown last year really laid bare the weakness in this system. As foreign operations shut down, governments prioritized their own demand, and the U.S. came dangerously close to a supply shortage. Now globally, there are 52 reactors under construction, most of them in Asia. And that's not only going to drive the demand picture for uranium for years to come, but could create a huge supply shortage as countries fight for these resources. It is this supply-demand imbalance for uranium that prompted Bank of America analyst Lawson Winder to raise his 2021 price target for the commodity by 18% last week and boosted his 2022 target by 41% to $53.50 against a current price of just $35 per pound. Now currently, the U.S. accounts for just 3% of global uranium production, though Canada is a larger producer at 22%, so we'll be focusing on companies with assets here in North America. Now, uranium spot prices have been volatile from year to year, but are still less than half the 2011 peak and a fifth the 2007 highs. The federal government devoted $75 million last year to creating the first ever national strategic reserve of uranium. Now that combined with this growing demand should help drive prices over the next few years. Now futures prices for uranium have jumped 40% in the last month to a 7-year high of $42.50 a pound, partly on that coming supply shortage, but also on another short-term catalyst. The Sprott Physical Uranium Trust, a new trust trading on the Toronto Stock Exchange, started buying the commodity in mid-August and has bought over 24 million pounds, sometimes as much as 500,000 a day, which is a huge spike in a relatively small market like uranium. Now that increased buying has helped jumpstart the price and get investors' attention in the theme. And that's when the Reddit WallStreetBets traders got involved. At one point, the largest uranium play, Cameco Corporation, was the 3rd most discussed stock on the messaging board. Another Reddit board, Uranium Squeeze, has attracted almost 15,000 members since February. So let's look at those 5 uranium stocks, the investment case for each, and recent run in the shares. Our first uranium stock, and one of the highest returns since the previous video, is Uranium Energy Corporation, ticker UEC, with a 62% return since February. UEC is a pre-production miner with the potential for up to 4 million pounds a year and 3 projects in the United States, an interest in the Athabasca Basin in Canada, and a portfolio of projects in Paraguay. The company is fully licensed on its projects with a potential production profile of 4 million pounds of uranium annually from its Texas and Wyoming fields. In fact, the Reno Creek project is the largest permitted uranium project in the U.S. in pre-construction, with over 26 million pounds of measured and indicated resources. UEC has recently begun a physical uranium initiative as well, buying drummed uranium on the spot price but below industry mining costs, and has more than 1.4 million pounds of warehoused uranium. And the company's Hobson processing plant in Texas has 2 million pounds per year in processing capacity and really benefits from the proximity to those local mines for a critical cost advantage. The company has over $123 million in balance sheet cash and investments against just $10 million in debt, so a net cash positive of $110 million gives it plenty of financial flexibility to take these assets to production. And one thing I want to do in this update is not only look at that stock return, but the volume over the last week to get a sense for which of these stocks may be targeted by Reddit investors. The number of shares traded on a daily basis for UEC has nearly tripled in the week to last Monday, averaging 12.8 million shares daily, which is one of the highest of the 5 stocks we'll look at. Now, even after that 62% run in the shares, it's still a small cap company at just $860 million, so definitely in that penny stock theme. Cameco Corporation, ticker CCJ, is the largest uranium miner at $9.8 billion and up 54% since our February video. Now, like most of the miners, Cameco had to shut down production at some of its locations due to COVID last year, but was still able to produce 30 million pounds last year at an average realized price of $46 a pound. Now, the company operates assets mostly in North America, though it also has some fields in Europe, Kazakhstan, and Australia. It operates the world's largest uranium mine at McArthur River and, all told, has over 450 million in provable and probable reserves. Outside of mining, Cameco also operates its fuel services and marketing divisions, so this is a vertically integrated company that can take advantage of the trend in nuclear renewable energy. With Cameco's size and integration across the supply chain, it's able to get those economies of scale and efficiencies that a lot of these miners just can't touch. For example, it's able to produce uranium at an average of 15 Canadian dollars per pound, well under the industry average and less than half the current spot price. That 54% jump in the shares since February's video has made this a giant company, but volume still increased to 17.4 million shares over the last week from just 4.9 million previously. Now, that's a 255% increase in the daily trading volume, but actually one of the lower on the list, and I think at this size it's not getting quite the attention from the Reddit investors as the smaller companies. Energy Fuels, ticker UUUU, is another larger company at $1.2 billion and a 55% return since that February video. Now, Energy Fuels is more diversified across some critical elements. It's the largest U.S. producer of uranium and vanadium, along with businesses in other rare earth elements and recycling. It operates 3 production facilities in Utah, Wyoming, and Texas, and that recent move in those rare earth elements used in electric vehicle production could be a game changer. Its White Mesa mill in Utah is the only facility in the U.S. licensed and capable of processing monazite for recovery of those rare earth elements and uranium. The recent supply agreement with Chemours set it up to begin processing with less than $1 million in capital upgrades. So besides that diversification across mining, Energy Fuels has one of the cleanest balance sheets in the industry. The company has over $28 million in balance sheet cash against no long-term debt. Daily share volume has increased to 8.5 million shares over the last week from just 3.3 million shares traded daily over the last month. So a big jump in investor interest, but not quite as much as some of these other stocks either. We've still got 2 more uranium stocks to highlight, including one that's up 110% since February, but I want to make sure you understand the risks here as well. Nation, that prior video on uranium stocks was built on that supply-demand imbalance in the market, that long-term fundamental story that should send these prices higher. But anytime you have a great long-term picture like we saw in those 5 stocks highlighted, you're bound to spark some interest from those short-term investors, and I don't want you to think there aren't risks to these stocks. We've all seen what can happen to meme stocks pumped on Reddit, with shares of AMC and GameStop falling after the attention wears off. Another risk to these stocks is that buying by the Sprott Uranium Trust slows down. Now, the trust will continue to buy uranium to cover new investing dollars into the fund. That's how trusts work, collateralizing the investment in that physical holding of the commodity, but it's not going to be the buying 24 million pounds over the span of a couple of months. That was just the opening purchases to cover that initial investor demand, and it's probably going to slow a little from here. I still do like the long-term investment case on this market. I think investors can get in here, enjoy that short-term run higher for a little longer, and then even if prices come down a little bit, you're still going to be sitting on a gain and can wait for that longer-term story to play out. Back to our uranium stocks though, and next here is small cap UR Energy, ticker URG, now up 54% since highlighting shares in February. The company produces out of its Lost Creek, Wyoming project with a total production of 2.6 million pounds so far. Now, the site is expected to produce up to an additional 13.8 million pounds through 2031. URG also owns the Shirley Basin project, an older field producing 71 million pounds over 3 decades through the 90s and estimated to hold another 6.3 million pounds left to produce. But the balance sheet is a little shakier on this one, with just 6.6 million in cash against 13.2 million in debt. It's also got one of the biggest increases in volume, so definitely that near-term interest in the stock, with daily volume reaching 7.7 million shares. Now for that stock up 110% since our last video, Uranium Royalty Corporation, now trading under ticker UROI on the NASDAQ exchange. Now, Uranium Royalty is the first to apply that royalty model to uranium assets, so it has a partnership interest in uranium projects, receives the cash flows, and then passes that through to investors with a dividend distribution. The company has a diversified portfolio across North America and in every stage of development from permitted projects, production, and exploration. Its partners include some of the largest uranium miners in the market like Cameco, Rio Tinto, and UEC. And you can see how this is set up. For example, the company has a 9% interest and a 1% gross overriding royalty in the McArthur River project run by Cameco in Canada. Now, the project is licensed to produce 25 million pounds a year with proven and probable reserves of almost 392 million pounds. Volume has jumped nearly ninefold on the shares to almost 2 million shares traded daily over the week to last Monday, and really driving that 110% gain in the stock. Click on the video to the right for 5 of the best short-term investments to make right now. 5 fast return strategies that I'm using. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.